If you're looking for professional day trading education, high-level trade analysis and dissection, you have come to the right place. My name is Pat Mitchell. I have been a professional trader for the past 11 years, and I'm here to bring you exactly that. High-level professional day trading education, all here for free on YouTube and on X. And tonight, we are going to be talking about a few different things, but really specifically, uh, basically, should you stop out or shouldn't you stop out? And I'm going to give you a few pointers that you should be able to almost immediately implement into your day trading. So stay tuned. Let's rock and roll. I hope you all had a wonderful day. Give me 1 sec. I am going to fire up these charts. Let's fucking rock and roll. Let's do this. Okay, so now that we're into the charts, let's start going over things. Now, this morning we had a pretty extensive gap up, especially for us being stretched out. Now, this comes as no surprise, absolutely, as I did a mentoring live class over a month ago talking about this. It's going to pull back once and it's going to continue to rip. And when it does do that, I'm going to look for something very specific because I do believe that there is going to be there is a pending major catalyst on the horizon. And possibly I will do a future video on that because there is still a little bit of time left before this happens. And I can tell you what to watch for and what to look for. So basically, with this gap up, because this gap up is going to need to pull back into support, I will be looking for a short, okay? And then potentially into a long. Now, I took two shorts and let's discuss both of these. Now, this blue level and this blue level are both levels that I placed prior to the market open. And I just want to check something on the stream chat before I get cracking. Everything sounds good. Nobody said anything. I imagine it is. Okay. So these two blue levels represent a level of execution. Now, because of the big gap up and the level of extension, if you take a look here, I'm not looking to go long up here. Now, I don't care that SPY ripped. I don't care that Q's held. The bigger position is in the short, which it clearly was. So what am I looking for at these levels then? Well, it's something very specific. What I need out of these is if it's going to open above, it needs to then get below that level, that support level. Now it needs to test as resistance. As it comes back up to test as resistance, I will execute that trade short. I'm well aware that this thing can continue up, but I'm not starting in with a lot of size. Size management is so fucking crucial to these positions. So same thing happened on Qs. It barely sliced through, and I executed that as well. I executed both of these positions short on that retest as it came back to test that level. Okay. Now, there's some of you that might be watching this that are very new to trading that may not understand why. It is simple. If you are below support, it's going to come back and test as resistance. Now, because of the nature of these charts here today and the gap up, it will catch shorts that held overnight off guard. And they can, if it gets back up over that previous support, now proving resistance level, if it gets above that, they're going to freak out and it's going to squeeze out. But at some point, it will lose steam. Okay. And it's not going to take a mile for it to lose steam. It's going to lose steam relatively quickly, which is exactly what happened. Now, on SPY, from that area of execution to highs was $1, roughly $1.30 per share. Okay. That is well within my risk parameters on a $650 stock or ETF. I don't care about $1.50 going against me at all. It's minor. Even on options, don't give a shit. Q's was under a point. Okay. So both fell within my risk parameters. So what do I do next? Well, I'm simply patient. Okay. 1 sec. Now on SPY, as it squeezes up, I'm going to pay myself, or sorry, I'm going to add into that position, looking for it to come down. And then I would get out of the position. It didn't do that. It wanted to keep going. That's okay. So as SPY is much stronger than Q's, now Q's just ripped up and flatlined. Okay. A SPY is still squeezing. That's okay. Why? Because then I revert to watching Qs. Now, the trap was set on this one, as the title of this video says. So I'm going to zoom in, and now I'm going to discuss a little more so on Qs. I didn't even mention anything about SPY. That's not where my focus was. I don't care that SPY is squeezing against me. I could give two shits about that. It's still within my risk parameters. I don't panic because it's going against me. If it's well within my risk parameters, that's it. That it doesn't matter. So I start heavily focusing on cues. So what I first start watching is when it comes, oops, sorry guys, I need my drawing tool. When it comes up, it starts developing this range. As long as it doesn't break over that range and properly confirm that it's going to continue to squeeze, I am in this trade and I will fucking work this trade. And this is where you see my initial entry here, right there, which was right at the level, very small size starter. And then once it comes up, I'm going to add into that. It's confirming. So I am going to add in another little bit of size. And now I'm patient. Now I'm going to wait for this thing to really tell me a story. So as it comes down into this level, I am paying myself. I am working my position. So I'm locking in profit on this. Okay. What I noticed in this, and it's a lot easier to show you this when the market's live, and all of my members were fully guided in this. As soon as you see it tap out, what I said they were going to start doing is they're trying to rope longs in. Okay. This is what smart money does. You have to remember who your opponent is. Our opponent is smart money, institutions. Institutions' opponent is the retail traders, dumb money, us. It is so easy to fuck with retail traders. It's like taking candy from a baby to them. So if you know who your opponent is, all right, and you know what they're going to do and where they would do it, you need to put yourself in their shoes. Now, I'm not saying that you, as a new or struggling trader, is going to be able to immediately do this. You're probably going to read it wrong. But what you can do is refer back to this video as time goes on in your career, and you'll start learning and understanding what I'm saying here. So in this, when they hold it here, they're developing a range, real tight range, because it's holding this level of support. You're going to have longs start to work that position looking for the move up. Okay. Because remember, it's now back over support, but we're way too high without it finding a proper level of support, which is at least the previous close or this trend. That's where it needs to pull back into in order for it to actually come up. Okay. And that's what they did. You see what happened once that level broke? You see how it snaps down real hard and fast into that level? So you immediately will have longs, retail longs freak out because 90% of all retail longs have absolutely no trade plan, no risk strategy, nothing. They fly by the seat of their pants and they use like a Ross Cameron or a Tim Sykes stop out strategy of a first candle to make a new high or first candle to make a new low. That's how they stop out. It's dumb money bullshit. That's why their strategies don't work, guys. You need to stay clear of that information, like 100%. So that's what happens. It sells off hard, and then institutions will come back in and they will hold it here and they will buy it. Now I want to clean this up. And that's what this bounce candle is. Okay. It's a bullshit bounce candle. And as it was coming down, I said, what's going to happen is they're probably going to give a bullshit bounce candle and they're going to drive it back into that level, which they did. And then it's going to come down. As it comes down, it freaks these longs out yet again. Okay. And you got to remember, a lot of retail traders, they'll go in, out, in, out, in, out of a position because, again, they have no fucking trade plan. So again, they stop out on that position. They hold it. Institutions hold it back into this support. They buy it up yet again. Now it confirmed. You see that confirmation right there? That's a go signal for longs on the retail trading space. It comes up. They're not going to pay themselves because they never fucking do. And then that's where I am going to really start paying attention. And I said live in chat, we're going to see speed, meaning we're going to get the fucking sell off. And when Q sells off, SPY is going to catch up real fast. Now, it didn't quite catch up as fast as I was projecting, but it still caught up. the end result is the same. I don't care. SPY was actually waiting for Qs to definitively break. Okay, so when it was doing that, that's when it started selling off, stair stepping down, and then Qs needed to break a lower level, the opening price here, before it actually started selling off. So that's a little side note. I know there's a lot of information in these video, guys. Fuck, I get it, but I'm just telling you what I fucking know. So on this here, when it snaps down, now, because it couldn't hold this level of support and this right here, what happens? All of those fucking retail longs stop out yet again. And that's all these institutions in the smart money are doing. They're cycling people's accounts. It's like they're getting to them to go in, out, in, out, in, out, and they're just collecting all this shit just for the final sell. So now all that happens here is that institutions now let the foot off the gas pedal and they allow it to sell off. And that's what happens. It's just about gaining that little bit of extra fucking cash flow in. It's a small trap, but the trap is there. So what happened here is once it broke through, the next trade plan was to take this short on the retest, which I did. That's there. That's that entry right there. And then simply held for the sell off all the way down until it got nice and close into the level. And that was my final exit. So locking in $6,365 on Qs and $2,736 on SPY. SPY just took a little bit longer. That's all. Like, we had members that stopped out in this position because they got oversized in it. And I say this shit all the time. People need to stop fucking oversizing in their positions to where they can't handle a maximum risk. This looks like it came up a lot. It didn't. Relative to a $650 stock or ETF, that's nothing. $1.30, who gives a shit? You know, people need to start allowing these trades to work and like allow the chart to move. Too many times, and again, to reference the Timmy Sykes and the Ross Cameron approach to stopping out, it's too close of a stop. You're not allowing these charts to do anything. So why the fuck would you stop out? Allow these things to move and breathe. I want to ask you guys all a question as I'm cleaning up this chart right now. Okay. How many times have you ever seen a chart open up, come into support, let's say, and go straight up like this and just keep going with no pullbacks whatsoever? That is the natural flow of charts. When you're in a position and it starts going against you a little bit, this is what you think is going to happen in your mind. It's not going to fucking do that. That's such nonsense. What you're doing is you're giving into fear. Fear is a byproduct of not understanding. This is why it is so absolutely crucial to your trading success that you work with someone, a coach that can actually get you there. For some reason, day traders have this pissy attitude towards coaches and educators. I get it. Most of you have probably been fucked a million times because of these assholes out there that literally live in their mother's basements. They rent out Airbnbs and Lamborghinis for their fucking bullshit. They don't own anything. They're a fucking joke. I get it. But when you have somebody that's talking to you that's been doing this on social media for a decade, where nothing has changed, it's always remained consistent, why the fuck are you still sitting there wondering if you should join or not? Honestly, if you got a guy that can consistently pull in profit like this and his members are doing the same, is it not worth it to find out whether he's full of shit or not? Ask yourself, for $250, is it not worth it to find out? How much were your losses this week, last week, and the week before? Probably a whole hell of a lot more than $250. It's really a no-brainer. So if you are interested and you want to learn from someone that can actually get you there and gives a shit whether you make it or not, come to tricktrades.com. If not, continue to enjoy the free stuff. Just remember, you got to like, you got to subscribe, I think that's only fair, and it is going to take you a whole hell of a lot longer to piece these puzzle pieces together. But that's up to you. I hope you all have a wonderful evening, and I will see you guys tomorrow. Adios.